Out of 100 people, 4 will get the message.
With massive layoffs in nearly every sector, weakness in manufacturing, car sales and housing, and the biggest one-month decline in the trade deficit since the financial crisis, the economic picture is not looking good, which might explain why so many billionaires are loading up on gold, including hedge fund manager John Paulson and real estate mogul Sam Zell. Bottom line, now is the time to own gold, which is why the experts at Stansberry Research just stepped forward with a major gold prediction, arguing gold could soar as high as $3,000 by the end of the year, possibly even higher. You can find out why and get instant access to their #1 gold investment today. It's not bullion, an ETF, or a mining stock, but in the past, this gold strategy could have made you nearly 50x your money. Considering how quickly the price of gold has been moving in recent weeks, you don't want to waste any time missing out on the gains these experts believe are in store for this gold stock. To get a copy of his new free report with all the details, simply go to goldmaniareport.com. Again, that's goldmaniareport.com for a free copy of his new report. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show here on Stansberry Research. Today we are talking record central bank gold buying, Chinese spy balloons, inflation, of course, and anything else my next guest wants to talk about, because I always love catching up with her. Please welcome back to the show, Lynette Zhang, a chief markets analyst over at ITM Trading. Lynette, so nice to see you. Welcome back.
Well, thank you for having me back, Daniela. I love being here. It's been way too long.
Way too long. And where shall I start? Where shall I start with you? Let's start with, let's start with this goodie. Central banks. This is according to the World Gold Council, buying the most gold on record last year. We know the banks leading this were Turkey, but we also know China, Egypt, Qatar, all buying gold last year, adding a whopping 1,136 tons of gold. That's worth about $70 billion to their stockpiles in 2022. I've asked other experts this, and I want to get your take. What are the central banks doing with this move? What do they know that we should know, Lynette?
Well, what they know that we should know is that this is the end of the experiment, and they are at the end of kicking the can down the road. So, the gold buying back to 1967, and what was happening in the 60s? We were transitioning into a new monetary system.
Interesting. And there's a few clues if we dig a little deeper, Lynette. And of course, these are just, theses because we don't know yet. But if we look at China, this is their third month that they've reported, and they're always just releasing, small quantities. Like they just said this week, they bought another 15 tons. But so what do you think is the strategy behind China announcing these small amounts? And by the way, there are 2/3 of the gold bought by central banks last year. We don't know where it's coming from. So there's still this mystery 2/3. We have China releasing small quantities over the months. Can you kind of link the two, or any thoughts here?
Well, I think it's really hiding in plain sight. Do what I say and not what I do. And what they're doing is accumulating. I mean, nobody really knows how much gold China has stockpiled, because that information of what they mine themselves is just not really released. So, but whoever holds the gold retains the power and the choice. And in this massive global shift in financial dominance, I think what we're really witnessing is that China wants to come out on top. And since the U.S. doesn't seem to add any gold, right? I mean, I think that's really what we're witnessing.
Yeah, but I'm boggled by that as well, right? And I'm thinking, why wouldn't China want to show, hey, we're powerful here with our gold reserves? Maybe they have more than the U.S. Who knows? Why not come out and say, hey, we own a ton of gold here, much more than we're disclosing, to show? Why? What are they waiting for?
Well, they're waiting for the opportune moment because really the conflict between the U.S. and China has been escalating. And it's escalating right now. So I think the Chinese are extraordinarily strategic. And I don't think they like to show their hand until they are ready to actually take that position. And I don't think we're there yet. We need a huge crisis in order to justify a lot of the shift. But I think it's all strategic, to be honest with you.
Yeah.
And where is that gold coming from? I mean, we're seeing massive drawdowns on the COMEX and the LBMA. We've been watching that. So maybe that's where it's coming from.
And I obviously want to get back to China for obvious reasons, but you'll see where I'm going with this. This was like a news item lower on the radar, but these are comments from the president of Belarus, Lukashenko, that I want to share with you, because he said the world will soon see new powerful monetary unions with a new reserve currency. Speaking earlier this week, he said, a new system of mutual settlements is taking shape, including in international trade. In short, time is ripe for changes. I believe that new powerful monetary unions with a new reserve currency will emerge soon. Any thoughts on this, Lynette?
Well, absolutely, because we've been watching the U.S. weaponize SWIFT. But there was a movement to create a new monetary union through the BRICS, even before it was overtly weaponized, meaning the SWIFT system, the global payment system. So, I mean, we saw it with the creation of the Shanghai Gold Exchange. We've seen it with the BRICS nations coming together. So, absolutely. I mean, no currency maintains its status as the world reserve currency forever. And the U.S., has really been abusing that position in a lot of countries' opinions.
What do you think the U.S. is planning to do about it? I mean, they obviously see the rise of the BRICS. Do you think they're just sitting back thinking, impossible, no one can overtake us? Or are they concerned and carefully watching this? What's your take?
I wish I wasn't about to say what I'm about to say, but I think that I think it's a very high level of arrogance because the U.S. dollar is still primarily used in global trade. And so I think they just can't believe that they would be knocked off their seat, or maybe what seems like a conflict is not really a conflict. It's more a handing off of the baton.
Interesting.
And we aren't going to know that.
Explain. You think they would want to hand off the baton?
Well, there is historic precedence for that. I mean, back in '69, when the SDR was created over at the IMF, the U.S. had gone and said, here, take this back. We don't want this anymore. But then Kissinger created the petrodollar. And we see that petrodollar now falling apart with Saudi Arabia saying, oh, well, we don't have to just take dollars. So, but here's the thing that I've been asking, and nobody's really going to know the answer to this. So this is just a possibility. What if the world, all the leaders, all the central bankers in the world actually know that this is the end of this current experiment and they want to transition us into the new system and retain their power? So part of what always happens during these transitions are wars. But if you look at what's been happening for really quite some time, especially since 2008, don't we seem to lurch from crisis to crisis to crisis, keeping everybody off balance?
It feels like that to me, yeah.
Exactly. So what if it's not really them versus us, but everybody, all the central bankers and the governments working together to create this transition? I know it sounds crazy.
No,
but
nothing sounds crazy anymore, Lynette.
Right.
Okay. Is it to usher in the new era of central bank digital currencies?
Oh, yes. It's the surveillance era, and I just got goosebumps. And who has been leading the way to that but China? And, other countries can look at China and say, oh, well, look at their government versus, they might say we have democracy, but we don't really have democracy here. But China's been showing the world how to control their population, except for just recently when they changed the mandate. And I think that's because of the population was starting to rise up in more different areas. So I was very happy to see that. But China's really been showing us the way to get adoption of the CBDC and how to control a society. So it would make some level of sense for them to be taking over.
I have had experts as Doug Casey recently on my show saying 2023 will be the year that we'll see the introduction of central bank digital currencies. Some would say it's still too soon. Any takes here? Could this be the year? Are they still in pilot project phase? Where are we at with it, you think?
Well, I think we're a lot further along with it than they want us to understand. So I would agree with Doug that this is going to be the year that we see the CBDCs introduced in earnest. And I can see it, and I could be dead wrong on this, but I could see it happening the second half of this year sometime.
Wow. And I'm assuming you think it would be China to be the first, or? I mean, Doug had said it would be a country like Sweden, he put out there as what he thinks could be the first. But
China's already utilizing it for a lot of their population. And we've seen smaller countries, everybody's experimenting with it. But I think we're going to have a big crisis this year. I don't think there's going to be a soft landing. I don't think that there is disinflation. I think there's going to be a hard landing. I think there's going to be a big crisis because, and I talk about this piece a lot, and I don't really hear anybody else talking about it. And maybe it's going to be a big fat nothing burger. Maybe I'm wrong. But we are in the middle of that transition from LIBOR, that interest rate benchmark, into, in this country, in the U.S., SOFR. And they're getting some pushbacks, particularly from CLOs, collateralized loan obligations. And I don't think they can make the transition. I mean, there's still over 610 trillion notional value contracts that have to be converted. And even with their mathematical fixes, they cannot get the SOFR to show interest rates the same as the LIBOR, and that impacts all of the contracts that still have LIBOR embedded in it. And why isn't anybody talking about it? Because this is a big experiment that has never been tried before, ever.
So you're talking a crisis bigger than '08, much bigger.
Oh, much bigger. Yeah.
A complete system default, Lynette.
It could be a complete system default, but I think they need a crisis to cover up this whole piece in here. So maybe it happens before June, maybe it happens after June, but I have a feeling that we have to have one to cover up Wall Street didn't think that they could do it. And you've got some on Wall Street, particularly in the collateralized loan obligation space, that are really starting to push back because their payments have been reduced. And so they don't want to make that transition. Can it be forced? I don't know.
I always want to make this relatable because I'm sure a lot of folks at home are thinking, wow, Lynette, what you're outlining is horrific. How does it trickle down and affect me in my day-to-day?
Well, it could very well affect you when you open up your mortgage statement, your car loan, your student loan, your credit cards, any debt obligation that you have. All of a sudden, they look different. How about if you're generating income from bonds in some way or anything that generates income that's contract based, and that's smaller. So what if your debts are bigger and your income is smaller? That's how it could impact everybody. Plus,
I want to go back. Yes.
I'm sorry. One other thing is
Yes.
that it changes the valuation of those contracts. So all of the banks that are sitting on all of those debt contracts, that they're showing a valuation here because of the contracts, and all of a sudden that valuation shifts, that's tectonic. And possibly one of the reasons why the FDIC said there will be a bail-in.
And this goes back to your thesis and belief of why you're not in the banking system.
Right. I mean, I am to a degree, but not to any level that I can lose that's going to matter to me at all.
And we'll circle back to that point. But sticking to surveillance, I knew you were coming on and wanted to get your thoughts, obviously, on the Chinese spy balloon, which we now know is part of a broader Chinese military surveillance. But I want to bring up this point. I was watching an interview with Phil Mudd, who's a counterterrorism analyst, and he says, quote, this says a lot more about the inability of Washington and Congress and the White House to talk about relatively insignificant national security issues than it does about intelligence. So, I think the question is, how much of a threat are these spy balloons? Two, are we really surprised that the Chinese are spying on us? I mean, also some would argue the US has the largest spy apparatus on the world. We're spying on countries. Other countries are certainly spying on us. And hello, hasn't TikTok been spying on us this whole time, on our children, everyone, billions around the world? So should we be surprised? How much of a threat is it? Or is it just more noise, Lynette?
Well, I think it's a lot of noise. And, I was listening to Danielle DiMartino Booth this morning on Bloomberg, and she made a really interesting statement. And that was that after 40 years, the Federal Reserve's new policy is to keep everybody off balance. And those weren't her exact words, but that was the essence of what she said. And so again, when we're lurching from crisis to crisis, when I look at the spy balloon, I think it's really interesting that they allowed it to come in Alaska, but they didn't shoot it down until it was off of South Carolina or something like that, which means it had the ability and did go across the entire country. So I think and you think they didn't know when it came in by Alaska? Of course they knew. So it kind of goes back to, is this are there going to be unintended consequences for the governments and the central banks, or is this absolutely intentional? And keeping people off balance constantly, it makes them more vulnerable.
It does. And it also coincides, Lynette, with that leaked memo from the general saying, we could be at war with China by 2025. So yes, this constant pitting against US versus China, is it all just created and for what, to your point?
Well, for what is to justify the hyperinflation, right? Because war always justifies high inflation. I mean, you can look back historically, and since 1989, I did a whole study on that, where the timeline between wars grew smaller and smaller and smaller. And by 1989, we've been in a perpetual state of war, which has really validated the need for the larger military-industrial complex, as we know. So, we're not going to know the answer to that. We're probably never going to know the answer to it. But it looks like a lot of unnecessary provocation to me.
Also want to get your thoughts. We had the State of the Union this week, obviously differing opinions on how President Biden did. Missouri Senator Eric Schmidt saying that he, totally missed the mark on the Chinese spy flight. He missed the mark on the border crisis, the drug issue. Obviously, others praising Biden for, the economy right now, for the robust jobs numbers. So just your take, and if you had to grade that State of the Union, what would you give it?
Well, I would probably give it a C, right in the middle, which is where they all need to be anyway, because the politician's job is really, and this is true for Jay Powell's too. Well, not anymore, apparently, but it's to keep the public calm. It's to keep the public believing that they are in control, that they know what they're doing, and that everything is okay. But, we have the debt ceiling issue looming again. And is that going to look like it did in 2011 when we were downgraded? We have so many different games of chicken going on. The markets versus the feds. I mean, it was, and I don't know if we spoke before this, but last August, when the central bank, first the Fed, and then the rest of them gave up forward guidance, that was the shift to the new, let's keep everybody guessing policy. I mean, there's just too much that doesn't make sense, that is potentially unnecessary provocation. Look at North Korea, right? North Korea is not going to talk to us, but yet we know they have, and they've been testing nuclear warheads. And we know, that they can reach the U.S. There's just so much.
I think that's a perfect, and you just gave me goosebumps with that. I think that's a perfect summation, that it is just, keeping us on our toes. We don't know. And, before we talk protecting ourselves, just a few more thoughts on the Fed. From the last conference, it's quite clear that they do plan to continue raising rates. For how long? Do you have any thoughts on where the Fed goes from here, and what do they really want to get to in terms of inflation?
Well, in terms of inflation, it really is about credibility. I don't think any of this is really as much about it fighting the inflation that they caused with this thing, the ability to just print an unlimited amount of money, as it is about them fighting to get their credibility back after they handed it away last August. And so I said at that time, and now we're watching it play out, the markets don't believe the Fed. They don't believe them. And they, I had someone ask me a question recently, did I think that the markets could overwhelm the Fed's ability? And my answer was yes, absolutely. And that's because of all those derivatives and how much leverage there is in the system that is breaking down. In other words, liquidity. After all of this printing, where did all this liquidity go? Right? You know what I'm saying? And yet, so why are the markets so illiquid?
I need to get myself that prop, but
yes, you do.
To that point, the last time you were on, it was way before the crypto carnage. Yeah. And you were very critical of the storage of wealth in the form of blockchain technology. You said precious metals will enable you to survive anything. So I'm guessing you have not had a change of heart when it comes to crypto, or should
that would be accurate.
Specific Bitcoin. And Bitcoin, thank you. And your take on what we're seeing in gold this year. Does it feel like a different market to you than other runs?
No. I honestly, the only reason why I care about the spot gold and the spot silver market is because that's what people see. And I don't know why they believe Wall Street, but that's what they, believe. No, I have not changed my mind on Bitcoin or cryptocurrencies. I think that they will continue to be around, although not as many as there are out there. Who will survive? probably Bitcoin because Wall Street has so adopted it. But would I hold wealth in there? No, I don't own any. And after I see who actually does survive, maybe I will, maybe I won't. We'll have a conversation then and decide. But with gold, what we've also seen is likely peak gold. I mean, even at these levels, we are not seeing the level of recycling come into the market. And so part of me wonders, okay, so is the public pretty much played out with their gold? Have they sold the gold that they wear on their bodies and they don't have more of that to recycle? So we see recycling down like 30% year over year. That's pretty substantial, especially with what was happening in the prices. Right. And we see, even though production increased by 1% in 2022, that's minuscule again, based upon based upon the availability out there, and with central banks really gobbling up everything that's coming out. There's a finite amount of this. That's it.
Record amounts since the 50s, Lynette. So no, I hear you. You're saying the price should be way higher, so that's why you don't even pay attention to the spot price.
Because all that is a contract. And I don't know where it really is now, but if you go into the office of the comptroller of the currency and you go into their derivatives report that they publish quarterly, so everybody can see it, and you go to the gold, just put in Control S or Control F and do a search on that, you're going to see a massive jump in the gold derivatives for the last few quarters. And that's because they had to change the accounting mechanism to reflect more accurately. Is that accurate? Probably not. I mean, they just...
Yeah. And just getting back to your point about the interests of Wall Street and crypto, and I need to fact check this, but someone sent me a screenshot today that Shell is actually one of the main sponsors of the annual Bitcoin conference that happens in Miami. I mean, so now we're getting huge corporations backing Bitcoin.
Yeah. I mean, yes, Wall Street has adopted that. So my question, and how much money would have gone into gold that went into Bitcoin, right? Or went into other cryptocurrencies? Right? Do they want you holding this that's outside of the system and not subject to geopolitical risk and is a proven inflation hedge and is the only financial asset that runs no counterparty risk?
Yeah. Valid point, Lynette.
So I don't know. It's not private. I mean, you have to give them your name, your social security number. You have to give them all your information when you buy it. And even if you go on and look, it says it's not private. I don't know. Well, and then we see cyber attacks that are happening recently with Ion, which is a UK derivatives company. And so now they're having to, derivatives are what's going to take the system down. It almost took it down in 97 or 98 with long-term capital management. Again, in 2007, 2008, that's what kicked off this crisis. I think the third time's a charm.
Lynette, on that note, what an overview. I love speaking with you and getting your thoughts, which are just always have a different take. And how's your gardening?
It's going really well. I don't have it in here, but I brought a bunch of tomatoes from my garden in for some people today. And eggs. I don't have to worry about the $20 a dozen eggs. My chickens and ducks are doing great.
Fantastic. More power to you, Lynette. Good for you. Send me some of those. All right.
I wonder
always
if
a pleasure.
Could.
I'll just come visit you. I would
love that.
With my basket and a bow.
And your babies.
And my babies. Thank you so much, Lynette. It's always a pleasure. Come back soon, okay?
I absolutely will, Daniela. You take care. Thank you for having me.
Thank you. And thank you for watching. Wow, what a conversation with Lynette Zhang. We'll have more incredible content coming your way, so be sure to stay tuned to the Daniela Cambone Show and sign up at danielacambone.com to stay on top of it all. That's it for me. Thanks for watching.